how did that lead you to where you are now with Signal Ventures? And when did you form Signal Ventures?
Yeah, I formed Signal Ventures in about 2018.
About 2018. Okay.
Yeah, so what got me through the great financial crisis, luckily, I realized kind of back to my home flipping days that there's opportunities in foreclosure. Like when houses go through foreclosure, there's deals to be made, whether you buy it short sale or auction or from an REO bank. So I got focused on that in 2007. And for the next, I think, 5 years, we bought and fixed up and sold about one house a month. We were the busiest at our auction, and we kind of got a niche for buying the houses that nobody else wanted, the bank-owned stuff. A lot of them were mold, broken pipes. And then there was some houses that people had started and they didn't finish. They dried in and they walked away. And
All right. Welcome, everyone, to today's episode of the Blue Ring Multifamily Podcast. We like to dive deep into the stories and strategies that make real estate so exciting and rewarding. I'm Jeanette Byrne Buck, your host, and we're passionate about helping investors like you unlock the potential of, in our case, multifamily syndications. And today I get to introduce you to someone who's redefining how we see the value in real estate. We'll hear more about that today. Jason Adams is our guest today, and he's been in the real estate game since 2001, according to his website, and he'll tell us more about that today. His journey is really diverse and inspiring, and I love those stories for sure. And I guess you've worked, Jason, everything from residential development to storage, car washes. You've kind of done it all and been fearless in that regard. And currently focusing a lot on data. And I'm based in Redmond, Washington, the home of Microsoft and a lot of tech industry. So that idea of data, is about every third word you hear out of anybody's mouth in that part of the world, right? So,
yeah.
but I think you're using data a little bit different, even from what we link up or think of in terms of Excel spreadsheets, right? So for the listeners, whether you're new to real estate or a seasoned investor, I think Jason's going to have some really good insights for us. So that being said, let's dive in. And Jason, this is the first thing that I wanted to hear about. I'm a healthcare provider, actually. I still have a W-2 job in addition to the work that I do in multifamily syndication. So as a healthcare provider, I can say there is an official disease called the bug of real estate investing. It's a thing that afflicts us, right? And you caught it about 2001, is that right?
Yes.
And so you were in college.
I was in college and the first thing is I had a family member that invited me to one of those big events up in the Rose Garden in Portland. It was one of those grow wealth, grow health, live a great life. And I was 21 at the time. I was like, that's me. So I got invited to go to this thing.
Yeah.
And they had, it was all the speakers. They were talking about, how to make passive income, how to multiply yourself, how to limit your taxes, how to avoid liability. And I was just like a sponge. I was just sucking it up. And I went to a couple of speakers. They were ultimately at the show just saying just enough that you would come sign up for their next thing, right? And so I went and signed up for the next thing. And I think I drove back up. I was going to Oregon State University at the time. I drove back up to Portland and I went to this little workshop with this guy named Ron LeGrand that was flipping houses. And so he had a couple books and CDs. And so I didn't have any money, but I had a credit card because in college they give you a free t-shirt if you get a credit card. And so I was like, oh, I got a credit card. So I'll just charge it, buy some books. And he's like, I guarantee you will make your money back in 90 days. And so I was just graduating from college. I went back to Bend where I grew up and I started buying and flipping houses and it worked. Like I managed to do it.
One of the people that did it. Yeah, and made it work.
So that's what I did for the first, 3 or 4 years of my career.
So the real estate bug, that wasn't that the year cash flow quadrant came out too?
Oh yeah, yeah. I read the Rich. Yeah, I was like spring break my senior year. I read Rich Dad Poor Dad my spring break in my senior year, and I came home. I was like, or I was at home. I was like, Mom, I forgot what I want to do. I want to be an investor. She's very supportive, but she's like, most people get a job first to make some money,
Looks like I want to
and
be an actor.
then you invest the money that you make. And I was like, good point. Well, I better learn more on this topic. But that, Robert Kiyosaki I read through all of his books at that point, and was a big inspiration for me.
Yeah, I remember reading both of those books at the time. I think it was about 2001 when those came out. So you get this bug in college. You're pretty fearless. You jumped in. A lot of people, I think, I don't know what the statistic is, but a lot of people who buy these programs never do anything with them, right? It's the bulk of people kind of get inspired at the seminar and they want the dream, but they don't actually start. But you did. You jumped in, and so when I was looking at your history in real estate, one of the things that I saw is starting in 2001, that means you've seen market cycles, right? And
Oh
you've
yeah,
been that, which is our equivalent of a PhD, right? In real estate
yeah,
of learning would be going through a market cycle. We don't get those in college, we get them in the real world. But if we focus on those years between 2001 and 2007, right? You were still doing a lot. We hadn't come to the global financial crisis yet. But in those years, what kind of stuff were you looking into and learning about?
yeah. Well, it started off with fixing houses, and luckily, I grew up and was returning to Bend, Oregon, a fast-growing town. So there was growth, people moving here. And I quickly realized I found a house on two lots that if I could split the house and the lot, at the time I sold the lot to a builder and then it reduced my basis in the house. And so I started keeping a couple of these. I was like, well, geez, like I don't remember. I paid 130,000 for the house and then I sold the lot for 70. And so I got $60,000 rental house that I can rent out for $800 a month. Geez, maybe I should keep it. So I was able to start like subdividing properties. And then I found a house that sat on like a 1.5 acres.
Mhm.
And I learned you could divide that into 12 lots and tear the house down. So I thought, boy, this is really cool, subdividing. So I got into subdividing infill land. And there was a huge building boom in Central Oregon. And in 04, 05, 06, it was just peaking. I think Bend was the fastest appreciating home values in the country. Like in 2006, it was like 40% one year. Prices just went.
Yeah,
And so
everything looking good, right?
yeah, I just figured Bend had been discovered. Like this was a new thing. I had no sense of cycles, no sense of debt levels, no sense of the consumer stress, no sense of, bank stress. So I went and, went to the banks and I went and borrowed $4 or $5 million, went and did, 3 or 4 subdivisions. I had a balance sheet at one time that was like $4 million and I was like 28 or something. I'm like,
Right, you're still in your 20s. Yeah.
I figured out life. And then market changed. And Bend in 2009 was the fastest depreciating home values of any town in the US. So it fell one year like 50%. So I had lots that I was planning to sell for about, or they were selling for about 230,000, that in 2009 I sold for 37,000. So it was like a 90% loss in value of finished lots and land in my market. And that was a huge lesson learned, wake up call, like graduate school. Like, what do you do now? What do I do now?
Yeah, I have no doubt that was extremely painful. Um, and maybe people at the time, or you had mentors, they said, this learning experience will be worth it someday, right? And it is, but what a hard thing to go through, right? But I know too, in real estate, there will always be cycles, day to day,
Mhm.
week to week, some run month to month. And when investors decide to work with someone in real estate, it's good for them to understand that their partner knows how to handle those things, right? And
Yeah,
can handle these types of market
absolutely.
cycles because you're guiding the ship, but you don't always know what's in the water, right? From that. So great experience in that time. I've spent some time in Oregon. I've never got to make it to Bend, but I've heard only good things about it. So then we hit to 2007, right?
Mhm.
And you're despite that downturn, which, very few people saw coming, and we all, took some people out of the game, you stayed in, right? You made it through that and learned from that. Did you have mentors at the time?
Yeah, I had a mentor, friend of mine. He was or is, roughly 30 years older than me, and he has been in the Bend market developing for probably 30 years more than me. And he was here during the 80s when it went through Bend, and the economy went through a similar cycle. And what he told me, certainly in a down market, you got to lead it down. So you got to like drop prices quicker than anybody else and focus on paying off debt and just living to, you know, do business another day. And so that was, some people were just holding on to their profits and their capital. And at least I was young enough and I didn't have a wife or kids. So I was like, okay, I just, my integrity, my name, my credit is more important than any dollar amount. And so my balance sheet went from, like I said, about $4 million positive to $800,000 negative. And I was meeting with him and he said, you know what, Bend is still a good place. You're still young. You're going to learn from this. And as odd as it sounds, your market share is growing. I'm like, what? How could my market share be growing? He goes, look around, look about how many people are quitting. Everyone that quits is part of the market and their share goes away. And so even though you're losing money or not making much, your market share is gaining. And when things stabilize, you'll be in position to do stuff. And so I was able to, make it through that period of time without any bankruptcies or foreclosures. And when things started going again, I was one of the few left and in a really good market again. And so between 2010 and 2019, the next 10 years were incredible.
Yeah. And you were being given a huge lesson on the long game, right? That real estate is over time. So you held on, you didn't have the family that you were taking care of at that time. And as you said, people are dropping away. You had some mentorship to get through that, and you did, which was great. And how did that lead you to where you are now with Signal Ventures? And when did you form Signal Ventures?
Yeah, I formed Signal Ventures in about 2018.
About 2018. Okay.
Yeah, so what got me through the great financial crisis, luckily, I realized kind of back to my home flipping days that there's opportunities in foreclosure. Like when houses go through foreclosure, there's deals to be made, whether you buy it short sale or auction or, from an REO bank. So I got focused on that in 2007. And for the next, I think, 5 years, we bought and fixed up and sold about one house a month. We were the busiest at our auction, and we kind of got a niche for buying the houses that nobody else wanted, the bank-owned stuff. A lot of them were mold, broken pipes. And then there was some houses that people had started and they didn't finish. They dried in and they walked away. And so the banks didn't know what to do with these things. And so I was buying 2,000 square foot houses for like $50,000 or $60,000 that for a shell. And so we have to go in and we would do the insulation, wiring, sheetrock, paint, and sell it. And it was definitely lucrative, but it was also a hassle because you were taking on the previous owner's construction issues. So we did probably 10 of those, and then it kind of seemed natural to start building homes from scratch. So I remember buying a lot above our old mill district. Today homes are selling for, probably close to $1 million, but I was building a $200,000 spec home in about 2011, and I was scared to death. Like it seemed like a bomb I was playing with, but built it. Somebody bought it, and it was off. And so I became a home builder for the next few years, and I grew to about 50 homes a year or so. But I've always had a kind of a desire for, I don't know, distress is the right word, but kind of the orphaned assets, the things that nobody can figure out what to do with. And so I got myself into a car wash and a storage unit and multifamily because there was some issue going on with, owners or debt. And I think that's kind of my, I guess what I took out of the great financial crisis was how to solve these things. So that was kind of my little leeching into other markets. But then I realized I did start a family. I got married, had two kids, and the life of a home builder is is a really busy one, particularly if you didn't inherit it from your dad and you're just really starting it.
Yeah.
So I realized that the quality of life, it was really a job that I didn't want. And I like homes, I like home buyers, but it's a big wheel, a lot of people. So I actually sold that business to a former employee who was running jobs. And I got that's when I got focused on being just the developer. And Signal Ventures is that idea for us that we're not the general contractor, we're not the property manager. We are finding deals, we're putting the money together, we're creating the vision, creating the team, taking it through some level of stabilization. Then we typically like to sell it and do it again.
Right. Yep. Were you doing a lot of the work yourself, the physical work before Signal?
No, not when I was a home builder. I mean, my first 2 years out of college, yes, I bought a house. I was painting the eaves and seeding the yard, moving the sprinklers.
Right.
I never really was that handy. I wasn't even, taught as a kid. My mom was a realtor. My stepfather was a property manager. My dad is a CPA. So the business of real estate is what I understood and wanted to get good at.
Right. So yeah, you always had a genetic advantage. It was in the family too. So this is and then yeah, you've been good then at realizing when to do things and when to outsource them
Mm-hmm.
and let other people do what they're good at and you do what you're good at. And one of those things sounds like we're going to move into in a minute, understanding your approach with data. Um, I'm guessing too. You learned from what you went through with the down cycles a lot about timing,
Mm-hmm.
right? So there's data which is useful or not, partly depending on how you apply it and when you apply it,
Mm-hmm.
right, at the right time. So I think you're going to tell me that comes into your use with Signal. Um, and your partners at Signal, it sounds like they agree with you too, that data is one of the most important things that you have available to you to find these underserved assets that could be performing better.
Yeah. I mean, data for me first started out, I literally I had a self-storage software. I had a car wash software. I had a home building software. I had an accounting software. And it took me so long to like make sense of it. Like, how's my cash flow doing? How am I going to turn out in 6 months? Am I okay? Do I, my profit? Like, it was really just a lot of logging in and looking, printing stuff out, a lot of highlighters. So I wanted to be quick answer to things I cared about. And that's where it started. Then I think that, yeah, the forecasting piece of any business and particularly real estate is of particular importance. And I mean, it morphed a little bit into the economy. So my hobby, I would say, on the side is economic forecasting or visualizing economic data. And I think it's from my past experience or pain that I had no view of the economy in 05, 06, 07. It was not even on my mind. I never
Right.
considered I should check in with it. And
Well,
now
things have been pretty stable for a long time.
it was stable, but it was also just going up. I'm like, why would I want to get off of the up train? Like, who wants
Mhm.
to get off a rocket ship? Well, rocket ships do come back down to earth. So I think understanding the macro economy and what I don't control is really helpful, and just to accept the fact that it's okay, I don't control it. And there's things to do when it does certain things. And not to say the future is certain, but there's general trends, and it's certainly a lot more effective than turning on the news and saying, how's the economy doing? So I follow data for the economy, but then there's my own business with the moving parts. And I think, real estate's a funny thing. Like, some people think there's a secret to finding it. Like, we drive by it all the time. Like, we're
Right.
driving down the road, we're driving by real estate, but
Yeah.
it's not like Amazon where you can just pull it up on your phone, take a picture and be like, what's that cost? Is it profitable? Do I like the colors? Like, is it going to fit me? So there's this huge puzzle of pulling in land use data, obviously purchase price data, but you've got some sort of, like sizing, like how much units you're going to get. And then, what are you going to charge? And what's the debt structure look like? And what do my partners want? There's all these variables into a project. Now, if it's existing, which a lot of people like, it's simpler because you know more or less the size and you know more or less, what it's currently doing. When you get into development, it's just like a clean slate. It's just like, so we have had a, I don't know, pure, part of it's a need, but part of it's a desire is to shorten that cycle. I want to be able to look at a piece of land or a piece of, building and see how quick can I make sense of potential upside or returns. And I joke around here, what if shopping for real estate was like shopping on Amazon? Wouldn't that be great?
Yeah, it would. Yeah. And if you like this piece of property, you might like this one over here too. Right.
Yeah, like which contractor do you want? How big is it? Like what's the use?
Yeah. Yeah. Well, you streamlining it is important. And then there's, like you said, you pull all this data together, there's all these moving parts. And then to some degree, there's some forecasting that has to be done too. Like, am I in the path of progress, right? Is this going to be worth more in the future? And when you have investors, right, you're thinking about that very seriously because they're there to, as a business, to make money. And you want to, one of my favorite parts that we get to do, you already mentioned, we get to bring a neighborhood up when we do this work, right? We get to improve a building and people's living conditions and make them happy to call a place home, right?
Mm-hmm.
And you create jobs. There's just so much positiveness to the work. And then you were mentioning things online about the economy. I find that most of it's negative, and it actually instills fear versus the spirit that you're describing of, you know what, yeah, there's some stuff and landmines out there we got to watch out for, but if we do this right, we can make it work, and we can make it work really well. So you're coming in with that attitude, which I much prefer over what I see on YouTube a lot of the time, like the doom
Yeah.
and gloom and everything's terrible. When it isn't, we know it isn't, and we look at market cycles happen, they're normal, right? And we can cope with this. So yeah, I like your attitude a lot more. Was there a pivotal moment? These are, um, tell a lot in healthcare and in real estate too. Were there pivotal moments, when you realized something about your approach, that it was working, that data really, the way you were looking at it changed the game?
So I was building homes. I'm like, I better figure out this whole machine. And I had a rental property. I had this stuff going on. And I ended up going to the National Association of Home Builders show in, when was that? 2000, maybe 12 or 13, just to do some networking and learning and talking to software providers. And I started showing them what I was doing. So I'm at the show and I'm showing these other software providers what I'm doing. And they're like, we've never seen that before. I'm like, what do you mean? Like, don't you all like, aggregate your data and build charts and forecasts from your phone? And like, no.
No, Jason, we don't.
Yeah.
Yeah.
Then I was like, really? Gosh, this is shocking. They're like, yeah, this big builder over here wants to do it and we can't do it. You think they could hire you? And all of a sudden I was like, wow, this is really great. Like I could be a software guy, I could be a consultant. And long story short, I got hired by Clayton Homes, which is a Berkshire Hathaway company. They're aggregated, they're buying home builders. And so I get in this call with them and they're like, we'd like to hire you to help centralize all this data. And I was like, it just dawned on me, like, a company owned by Berkshire Hathaway who's buying other home builders. And these builders are building like 400 or 500 homes a year. This has got like an umbrella of, you know, four, five, six, $7,000 homes. They at the time, they had their builders email a spreadsheet once a month to corporate. And then somebody would manually kind of copy and paste and they would have a picture to send off. And I was like, holy cow, that is slow and error prone. And I wonder how many people are lying along the way. Like this, when people touch stuff, they tend to change it. So I realized at that moment I was ahead of things. And for about 6 or 12 months, I tried to pursue that business opportunity to be a consultant. And then I realized that I was stepping over dollars to get to pennies. Like I was chasing after $20,000 or $30,000 contracts. And I was like, but there's real estate deals I'm working on where there's hundreds of thousands of dollars or millions of dollars. So it was this funny thing. It was like, I know I'm ahead of the market, but I don't want to spend the time educating it. I feel like I was a big educator and not for pay. And so I actually, stopped the consulting for pay. I still talk about it like this, but again, to develop what I thought was a need and a niche for the kind of investment community, for myself first, but then for others.
No, well, I'm a fan of that method. I think we have to solve our own problems first, right? Before we can help other people, it makes sense. You would figure out this could be done better, or we have this obstacle and you got over it. Yeah. The education piece is fun. I agree. And I appreciate, like I said, I appreciate you being here and willing to share all this knowledge that you've come through. So here you are then in 2018, you start Signal, and then we have COVID right after, right? So you have another crisis to deal with, right? Other than the bank crash. Has there been one project that you found to be the most rewarding so far in your career?
Most rewarding. I had a lot of, I really enjoyed fixing up I mean, generally speaking, they all are, because you know, the neighbors and the community that I live in, it's fun now, even with my kids at this point, to say, hey, look at, I did that. Like, there's something's changed out there. But I bought an old rundown car wash not too far from my office in 2015, I think. It was the classic self-serve, and it was, broken hoses, quarters only, and met with the owner, and he was selling, and he said he was doing $3,000 a month in quarters, and he had convinced the business was dead, that it was all taken over by the drive-throughs. And I was like, I got a van, I can't go through the drive-throughs. I don't know what you're thinking here, but like, it seems like people want something that's working and will take credit cards. And so, I bought it for very cheap, basically the permits on the property, for about 175,000. And then I went and put about 200 or 300 into it with top of the line equipment, and of course paint and the like. It was more of an operation than I had ever done before. And then we had credit cards, and we started marketing and rebranded it, and started supporting some local youth organizations through car washes. And anyway, we turned that business from a $3,000 a month in quarters to $30,000 a month revenue, and increased we ended up selling it for 10 times what we paid for it. And I got to use it. I was a head customer of my own business, and I was happy. And so it was fun that I was able to look beyond the kind of the situation, and I looked more at the market and what people wanted. I happened to hit the whole like COVID outdoor recreation boom well. But then at the end, we were able to kind of hand it off to the next person. And I generally like to hand it off to a long-term operator, and I like to stay in the puzzle mode.
Right. I can see that. Yeah. And you're good at it. Are there one or two tips you could give? So there's some people listening, I think right now, where there are light bulbs going on for them, who maybe think like you do or are interested in what you do. Are there any tips that you could give them that would help them identify these missed or undervalued properties? Or, if they're driving down the street, like you said, there's real estate everywhere. Is there anything that could clue them in that there's a diamond in the rough?
Oh, for me, it's so much in the numbers. And I think the thing we all need to be looking at is how do I manage my numbers better? Some people think it's about intuition, like you just have a gut feeling or you're lucky. I don't know. My intuition has been wrong many a times, and I don't know that I can totally trust it. But when I build a team and collect the data and have clarity and confidence, I'll move forward with fear many times. I mean, a lot of projects, I'm like, holy cow, how am I doing this? Like, this is another zero. This is bigger than I've ever done, but I've got validated points. So I've got my, my realtor and my manager and my banker and my contractor and market study person and partner. And when they're all kind of lined up, like it's a green light, go, then I kind of sit on for the ride. So I think, real estate is a team sport or a team activity. I'm a fan of team sports. A lot of people try to do real estate on their own. So my biggest encouragement would be to build that team and ask that team, what should I be looking for? Ask the managers, what do tenants want? Is it a price point? Is it an amenity? Ask the realtors, ask the contractors, bankers. And at this point in my career, I'm starting to, get good ideas from other people. And they come to me and they say, hey, there's this project or this concept or this seller or this lender, you should try it out. And I'm able to, kind of calculate and understand it and kind of say yes or no. I know that's not the case for everybody, but I think it all happens through that team that you build. And I would say that the secret sauce or the diamond in the rough is that there's really good team players, the really good realtors, the really good lenders, real good partners. Like you find those people, and then real estate becomes, it can grow fast and be, fun.
I agree 100%. The team, when we educate people through our company, Blue Ring, the first thing we say is get your team together. Right? That definitely matters. And you don't want your team to be everybody just like you either, right? You don't want a clone of yourself 4 times, right? You want to bring people with different skills. Yeah, but the team matters. Okay, then looking forward, you're such an innovator. This is a fun question to ask. Where do you see Signal Ventures going in the next 5 years?
I think, gosh, I would say our service to investors on seeing deals. So your last question was like, how do you see the deal? Most people are busy doing jobs or doing life or doing retirement, or doing families, and they just don't have the time and place to see the deals. And so I think we are getting better at that to present, so syndication as the thing, but in particularly the visibility into the deal. And so in terms of like mobile, we just yesterday launched our first ever digital pitch deck. So most pitch decks I've ever seen are PDFs that get
Right.
emailed around. Well, we have a link that's live, it's like interactive, and it's on your phone. And I think the phone is I think all businesses, the story needs to be told from the phone. If you can't tell your story from your phone, the future is bleak. So we are going to be the best at telling, investment stories from your phone, but more importantly, translating it into what investors want. And so I think there's this big, it's not just the cash flow of the profits, the IRRs, it's the equity multipliers. It's understanding the leverage, the risk. And it's possible we might not even be doing the developing. I mean, I think we're more unique on the service side of the financial modeling than we are at actually finding the project. So it wouldn't be beyond my expectations that we're brought into deals as a syndicator. Actually, just last week, a local developer was developing 10 acres with self-storage and industrial. We're like, hey, can you just like come in and make this happen? And so I think our ability to pull the parts together projects, particularly this niche we're in, industrial and storage. By the way, multifamily and self-storage have almost identical customers. So, I think they go well together.
Yeah.
And I see light industrial as the multifamily of industrial. So the small businesses are very similar people as the renters, and that world we really enjoy.
Nice. All right. Last question. Although you've had, tremendous accomplishments, that even in just this half hour that we've gone over, but if you could go back and give yourself one piece of advice
Oh,
when you first started, right? You've heard that question. What would it be? What would you tell yourself to do? Usually people say, have less fear, or in real estate, there's a classic, the best time to invest is 20 years ago and the second best time is now, right?
yeah.
What advice would you give yourself?
I think I would say is like be a relentless optimist. I think the my past self has gotten cynical, like the world's coming to an end, or this isn't going to work. I've passed on so many deals that somebody else did and they turned out great.
Right.
So I think there's always going to be bumps in the road and failure. And so it's almost like accept failure is part of the process, but go forward as fast as you can, but just be optimistic. Just, it's also like in terms of healthcare, I think it's one of the great challenges in life. If you can be optimistic as you get older, it helps in real estate, helps being a parent, helps being a partner, helps everything. And even when it's a bad economy, be optimistic. Or it's a
Yeah.
bad deal, be optimistic.
Because it's going to get better. It's going to
Yeah.
change. Yeah. I think, yeah, optimism, patience is another one. We have to have in real estate, I think, to learn to be patient because there's so many players involved, right?
Mhm.
And so many things that we have to wait on, and somebody's going to get COVID or have whatever, right? Things don't always happen exactly when we think they will. But yeah, optimism for sure. I love it. Well, Jason, you have dropped so many pearls here. I think some big ones that I saw, this understanding of market cycles, staying optimistic during my market cycles is good. The long game aspects of this, finding these, using data to uncover these properties that would have otherwise been missed. Just so many pearls here. If people want to reach out to you, where can they do that best?
Yeah, certainly. I'm on LinkedIn. You can find me under Signal Ventures, Jason Adams. Our website is signalv.com.
Okay.
We're just getting started on Instagram and YouTube, so there will be more available to follow our progress. And I'm for the first time, I'm not a huge social media guy, but I'm gonna start sharing tips and giving access to all of our projects. So there'll be
Okay, so
some.
we'll see you on YouTube soon.
You'll see my YouTube for the first videos on my phone is going up here in the next week. So
All right. Well, congratulations. Yeah, those are big steps. I'm not normally big on social media either, but it's a fact of life, right?
yeah.
With what we do. Well, thank you, everyone. If you enjoyed our conversation, please feel free to reach out to either Jason or myself. We both love doing the education process and meeting new and seasoned investors or other people working in the space. Networking is really important to the work that we do. Thank you so much,
Okay.
Jason.
Thank you.
I appreciate it.